Helima, I would love if you could put on your former CIA analyst hat on in this equation and just talk to us a little bit about everything that Tina just mentioned, and then looking to this idea that maybe in some ways these are negotiating tactics. We've heard that story play out a lot of times before in the media and elsewhere, even within the president-elect Trump's inner circle, that these are ways to bring people to the negotiating table. These could be strategies. But from an analysis point of view, what exactly what is the likelihood that we could see a full-bore Trump administration when it comes to things like tariffs, and just how upsetting would that be to the global economy?
I think we really just have to wait and see. On the one hand, President Trump prides himself on being an exceptional deal maker. So is this just the opening, act? And we've seen a number of foreign leaders make visits to Mar-a-Lago to try to negotiate with Trump even before he takes office. But the question is, what are foundational values for this administration? And we've already seen them use tariffs in a little bit of a different way. I've heard it described in Washington as tariff as sanctions policy to affect change on issues like migration, on issues like drug trafficking with fentanyl use. So it's going to be very interesting to see, again, what is the full range of the Trump policies. Now, I cover oil markets, as you know, Dom, and we're watching very closely his plan to try to get oil prices to be around $50. And it's going to be interesting because he's talking about multiple things which may not mean you can get to 50. So they've talked about really trying to squeeze Iran, bringing back the sort of maximum pressure sanctions that we saw under the first Trump administration. Iranian exports have recently climbed to a 5-year high under President Biden, as they were very focused on keeping all the oil on the market. But if you squeeze Iran and you take off potentially 750,000 to 1 million barrels of Iranian oil, does that mean that you can still achieve $50 oil? Now, they've talked a lot about drill, baby, drill, and American energy dominance, a big theme of Trump 1. The question is, though, are U.S. oil executives going to exercise capital discipline as demanded by shareholders, or will they just, open the taps again and we see really, really robust U.S. growth? From everything we're hearing, though, from Houston, is that oil company executives are still talking about capital discipline. So the question is, if you have Iran sanctions, if you have capital discipline from shareholders, what's your path to 50? And so I would look at potentially what happens on China with tariffs. Weak Chinese demand has been one of the big headwinds for oil. If you do see a very, very serious tariff regime imposed by on China, that could potentially be something that helps bring down oil prices. So again, it's all going to be determined by what policies are implemented. But when we look at oil prices, which again is a very big focus of the incoming administration, it's going to be very interesting to see how they balance the foreign policy angle with Iran, how they do the pitch to U.S. producers, and what happens with China on the demand side.
Helima, could I just follow up with one point about this? As you know, the story has gotten complicated for the U.S. shale industry, the oil market here in the U.S., because at the same time that you want to bring down oil prices for the consumer, translating into lower prices at the pump, you're also in a situation where lower oil prices are actually to the detriment on a relative basis to those people who drill, baby, drill for that oil here, and it makes some of that capital discipline a little bit tougher. From an investing standpoint, the oil and gas industry in America will be a key focus of the incoming Trump administration. Just what do investors need to know about investing in oil and gas companies, especially those focused on U.S. production?
So what President Trump is pledging to do is he's pledging to make it a better regulatory environment for these companies. So ease of permitting, they're talking about in terms of pipeline approvals, in terms of ability to drill on federal lands. They're talking about making all of that easier. Also, very, very important for the U.S. natural gas industry. One of the day one priorities they're talking about is repealing the permitting pause on LNG terminals. That was something that the Biden administration introduced that was wildly unpopular, not only with gas producers, but also in states like Pennsylvania. And so I think it's going to be an easier regulatory environment going forward. I think some of the really key IRA provisions are going to be pulled back. But the question is that enough to unlock massive U.S. growth in the near term. And what you keep hearing from company executives is, well, having an easier regulatory environment is going to be important going forward. When we think about 2025, they're still saying that they're going to be disciplined in how they bring on production. And when you bring up the very important point about prices, is $50, that price target that's been talked about by Team Trump, is that something that's compatible with continuing American energy dominance? We've seen when oil prices fell in 2020 during COVID and during the Russia-Saudi price war, President Trump was pressed by U.S. oil executives to try to put in a floor for prices. And he actually became almost a de facto president of OPEC in helping bring Russia and Saudi Arabia back together, because the outlook at $40, $30 was not a good one for continuing U.S. production growth.